Hi there, welcome to ChainLink Wyckoff technical analysis session. And last week we covered ChainLink. It was like a little bit down, but not as crazy as this week. When I say it's probably repeating what happened in the last distribution cycle, let's go and take a look and see why I say that. Here, we see this pretty long red candlestick we have this week, and it got bounced up from somewhere near the green key level of $19.20. And when I say repeating what happened back in January or the last distribution cycle, so we had this buying climax back in early December, and then the price immediately automatic reaction down to December level. So by the time it gets to January, it got a second chance or second test, but then it eventually died down to a new selling climax and a new accumulation cycle. So between March this year all the way into July, those 4 months was actually an accumulation. And then here, what we're seeing now, you see the second test, right? And if these tags are correct, then what we're seeing is the first two legs down. So it's coming to a level that's previously as a 70%, it's going to come down for a sign of weakness, and it seems it has already done it. Not that it's over. This week's candle, there's still 32 hours left before it finishes. There's still time for it to come further down. Of course, for the bulls, they hope it to climb back to the $22 key level. But as of now, you see, when looking at these consistent volumes and this selling force up over there above $24.17, it seems like people are more willing to sell than to buy unless it reaches this or getting close to this green key level. So I would say this, I'll keep the question mark at the 70%, but it looks to me it has done something that happened back in January this year already. If it continues to happen that way, it may come down to do some horizontal trading and then eventually head towards a selling climax. That's higher chance possibility. Whereas heading towards the purple to show us an up first is still remaining at a lower chance range. And that's the sad thing, because I mentioned a couple of times also in other altcoins. So this declining peaks trend, if it applies to ChainLink as well, that means it's going to get lower and lower peaks every time it gets into a distribution cycle. And you already know what it means, right? Because if that's the case, that means you've got a very narrow range to trade, or like the trading range is getting narrower, meaning your return will get lower in the long run. However, the tricky part about ChainLink is also exhibiting an ascending selling climax situation. So that's converging to a point around middle of 2027, if it really lasts that long without breaking these two lines, the white line on the top and the yellow line at the bottom. If the price of ChainLink still continues to trade for the next 1.5 years, or like 1 year and 9 months, that will be very interesting, because it basically is going to squeeze to a point where a large breakout event would happen. Hopefully it's not towards the downside to where the level it was back in 2022 to 2023. that's how it is evolving right now. Okay, that's the big picture. We're hoping to see some bounce when it comes to close to the green key level, but that's no guarantee. It can bounce up to retest the blue key level. Remember though, this white dashed line is right at that spot, so it may get rejected when it gets closer to $26. Now, let's get to the daily time frame. Previously, it was basically a squeeze period, and then the squeeze force got released on Monday. So that's when we see from this horizontal trading section, the price swing to the lower edge of the channel box. Looking at this channel box, this downward channel box, I have to adjust this as well. Just to quickly say, currently, because of the releasing of the squeeze force a few days ago, there's not yet a squeeze happening as of this moment. It may take another few days for that to gather strength and start off a new squeeze. So for now, we can turn it off. And the adjustment I need to make for this channel box is, just notice I didn't cover the wick for the upthrust of the distribution. So it has a steeper slope than it originally has. And that's where the price has been bouncing off between the two edges. If I turn it to a line chart, you see it shoots up, gets close to the ceiling, bounces off, gets close to the center line, comes back down, center line again, and then the ceiling, and then now to the bottom edge. So let's draw the center line as well that cuts across the most frequent trading activities area. That's roughly right. So if I switch it back to the candlestick, you see a lot of these tops or heads or tails, heads or wick tip are around this line. So that's why we have this here. And currently you see for the past 5 days, it has been consistently rejected or bounced off from this line. And when we get closer to this edge, well, there's still like 2-3 weeks before that happens. A breakout event will happen again. So this center line crosses the green key level at around October 20th. So a breakout would happen before that date if the price continues to trade narrow range between this green line and this dashed blue line. Yeah, roughly a little bit more than 3 weeks from now. That's scenario 1 and time point 1. If you say, what if the price shoots up and trade along the upper edge or the ceiling and above this light blue key level, then the time point is similar. Around October 21st, coincidentally, the breakout will happen. So the difference is, compared to this, where it shows us either it's going to go back to the top half of the box to continue the downtrend, or it comes down to follow the lower half and continues all the way to challenge the yellow key level. The price actions trading up here means that when the breakout happens, either it bounces back into the box or it's going to break this downtrend and shoot above the ceiling and heads towards first this resistance and then the next resistance at $26.10. Just checking at this level, it's finding support where the buying climax was. You see these my cursor lines, right? That's a reasonable support level looking across the history, but then it may not stay very long until it gets to the next buying climax level of $17.80, and that's also an intermediate support level. not until it gets to the $17.10 that it finds a stronger support. Yeah, just double checking. Selling climax, I already put in the tag. It may be heading towards that direction, but hopefully not that steep. Yeah, I think that's pretty much for ChainLink. Just to quickly check the weekly, because previously we can draw a line here that to gauge the time window, but that's not necessarily important now because the price has already dropped through the light blue key level of $22. So expect some sideways movements for the next week or two before it triggers another round of price wings again when this gather close enough to form a squeeze. Hey Sip, ChainLink will be number one on CoinMarketCap any day. Interesting. I'm not sure when you say number one, what does that exactly mean? Number one in terms of trading volume or like trending or most visited? Yeah, so it's interesting time for ChainLink anyway. However it behaves is absolutely trading at the top half even when it was at its low during the past year of the long-term playground zone that I was talking about, the top half. And now it seems like it's converging towards somewhere near the top edge, waiting for a massive change in price. We're going to witness it very soon, I think. It won't wait till mid 2027. Otherwise, it would look very interesting when we look at the chart if it really trades in a way that bounces between these two lines. Not that I think it will last that long. It should eventually, when this distribution cycle finishes, I believe it will break the yellow line at least. So that's my wild speculation. Thanks for joining me.